Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.
Silver is the most critical metal of all, say some people. To debate that, I am joined today at the 2023 PDAC by Jeff Christian, Managing Partner of CPM Group. Good morning, Jeff. Welcome to Kitco.
Yeah, it's good to be here.
Well, thank you for joining us. As I said, some commentators say silver is the most critical metal due to its electrical conducting properties and its growing use in electronics and energy transition technologies. How true does that statement ring?
Oh, I'd give it a 50% accuracy. Yeah, I mean, silver is very important, but I think one of the advantages that should be emphasized to investors that isn't, is that silver is neither a strategic metal nor a critical metal. Now, there's several silver producers who keep saying, what can we do to elevate the awareness of the importance of silver to investors in terms of energy and energy technologies and the green transition? And because it's not being labeled strategic or critical. And the key is it's not strategic or critical. I mean, as defined, a strategic metal is very important for industry and the military, and it has very scarce, risky, at-risk resource availability. Critical is very important to the economy and the military, but it's not as scarce and at risk in terms of its supply. Silver doesn't fit that category. Now, if you look at the energy transitions, and I'm going to be doing a presentation here tomorrow, and I start by saying not all energy technologies are created equal. Solar power is the one that's most advanced, and the International Energy Agency says there's 100% of the capital needed to make solar power what we want it to be already allocated. And silver use in solar panels is now about 120 million ounces. It's taking off. And it's taking off partly because silver is neither strategic nor critical. There's plenty of silver available, and it's available from around the world. There's enormous reserves and resources in the ground, and there's 5.5 billion ounces in refined form above ground. So it's readily available. You look at other energy technologies, wind has a lot of problems with NIMBY. People don't want windmills in their backyard or their neighborhood or blocking their view of the ocean or the mountains. And it needs molybdenum, which is a critical metal, not strategic. Electric vehicles have a variety of critical metals, and it has a variety of other headwinds. They're coming along much more slowly. I mean, silver is not strategic and not critical, but it's extremely important. Not only in electronics, not only in solar power, but across a wide swath of human manufactured goods that are critical or important to human life. And that's really what makes silver so interesting.
Okay, so Tesla's not going to be buying a silver mine anytime soon, it sounds.
Well, I would not put anything past Elon Musk. He's made a lot of wrong-footed decisions in the past.
Okay, excellent. Let's talk a bit more about the silver market. You said the solar voltaic demands about 100 million ounces or more than 100 million ounces. Some say the silver market is in deficit with the demand being greater than supply. How serious is this, and what will this do for silver prices?
Well, the proper way to study any commodity market is your surplus or deficit is total supply, mine production and secondary recovery, less fabrication demand. And if you measure the silver market that way, it's not in deficit, there's a surplus. And that surplus is taken up by inventory holders, many of whom are investors. Now, there are people who try to promote silver to investors, and they say, we'll throw investment demand in with fabrication demand, and then we can say there's a deficit and there's a shortage of silver and we're running out of silver. And that's just the wrong way to look at the silver market. Silver market's in a surplus. As I said, there's like 5.5 billion ounces of refined silver in above ground inventories, and right now, combined mine production and secondary recovery is greater than fabrication demand by about maybe 70 or 80 million ounces. Most of that 70 or 80 million ounces is being bought by investors, and that's keeping the price higher.
Okay, and of course, investors can buy some of that refined silver from kitco.com. Okay, so with the growth of photovoltaic, is silver acting more as an industrial metal, or is it more as a currency? Because it has that sort of dual role, that Jekyll and Hyde nature.
I guess I should say, fair disclosure, I have some of my silver at Kitco.
Excellent, thank you.
And I've had it there for years. I often say that silver is a schizophrenic metal because it is, and it trades like a financial asset. It trades like a currency or a treasury bill. But it also has a very important industrial and fabrication demand component. And, with gold, you say, investors decide whether or not to invest in gold based on macroeconomic, financial market, and political factors. Supply and demand are very neglected by gold investors. With silver, you see silver investors, at least the really smart and successful ones, look at financial markets, economics, and politics, and then they also look at the supply-demand balance and what's going on with fabrication demand. So they look at it as an industrial commodity as well as a financial asset. And the fact that it's in a surplus, if you compare supply-demand balances done properly with silver prices historically, when the silver market's in a surplus, that means investors are bidding the price up. Surpluses in the silver market correspond with higher prices. Deficits correspond with lower prices because investors are dumping their silver.
That's counterintuitive.
It's very counterintuitive if you think of it as an industrial commodity. If you think of it like a currency or a treasury bill, then it makes sense.
Okay, the silver price is currently, $21, $22 per ounce. It's struggled to break out past $24 per ounce. But when the silver price goes, it really goes. What do you think it will take in this cycle for silver to exhibit that explosive price growth?
Well, as I said, investors seem to be buying about 70 or 80 million ounces of silver this year. When investor demand gets over 100 million ounces in a given year for physical silver, that's when you tend to see the price higher. So you saw that a little bit in 2020, and the price rose from $12, $13, $15 to $30, and then it came back off. So we're looking at investment demand over 100 million ounces will lead to higher prices. Then you say, what's going to cause investors to boost their annual silver offtake 20 or 30%? It's probably going to be economic or political factors. And it's probably going to be not a thing, but a series or a combination of factors that all sort of occur at once that cause investors to say, okay, I thought I was scared about the future of the world in 2023, but now I'm really scared.
And that's perhaps not necessarily society we want to be in. Okay, if the silver price does increase significantly, does that usually lead to an increase of byproduct silver or produced silver coming into the market, or are there other drivers?
There are other drivers. I mean, the price of silver correlates more with copper production than it does with silver production, and byproduct producers more or less will not increase their mine output to get at the byproduct silver. There are co-product producers who will, and there are byproduct producers who are really co-product producers but don't call themselves that. So you'll see some of that coming into the market. Yeah.
Okay. Now, recently we've seen quite a bit of activity in the gold M&A space, but we don't really see a lot of M&A in the silver space. Why is that, do you think?
Well, I think there are a couple reasons. And first off, you do see things, but they tend to be smaller deals. And I think the financial press and the mining press tend to focus more on gold M&As. They tend to be bigger, and it's gold. But you have seen some acquisitions of silver properties. But I think there are a lot fewer silver properties that have been developed in smaller silver mining companies that are in production that are really suitable for M&A. So what you tend to see are properties, often undeveloped properties, changing hands.
Okay, it does seem also that silver producers, when they do engage in M&A, it's usually to buy a gold asset.
We shouldn't go there, but okay. Yeah, there have been there were companies that were taken over by new management that said we're going to focus solely on silver. Then they changed their name and they start buying gold properties, and then the silver price outperforms gold, and they say, oh, I guess we really should have stayed as a silver company.
Okay, so final question, Jeff, put you on the spot. Is silver going to break out this year?
No, I don't think it is. I think we're looking at a range of maybe 18 to 20 on the low side and maybe $28 on the high side. We think that this year is going to be a year of transition, politically, economically, socially, and within individual markets, including silver. And we think that silver is building a base that when you see the worst times, which we don't think you'll see this year, we think they might be 2024, 2025. When you see a recession and when you see other economic factors and you see some problems emerging in some obscure corner of the debt market, and you see fiscal constrictions both in the United States and in other economies, and all of that kind of comes together, then I think you see investors will step up and buy more silver and the price will break up.
Well, I find silver fascinating because of its many industrial and monetary facets. Jeff Christian, thank you for joining us today.
You're welcome.
And I'm Paul Harris. Stay tuned for Kitco for more from PDAC 2023.
Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.